So you can start the session.
Yes, sir. Good evening. I would like to extend my warm welcome to all the guests to the webinar on International Trade Finance Opportunities for MSMEs, sponsored by Yes Bank. So, without any further ado, I would like to invite our first speaker, Dr. K. Vishweshwar Reddy, faculty member, ni-msme. Dr. Reddy has more than 26 years of teaching and research experience in the field of management, working in various capacities at some of the prestigious colleges in Andhra Pradesh. Dr. Reddy is passionate about entrepreneurship and takes a keen interest in the process of development of entrepreneurial talent. His contributions in the policy making of establishing EFCs in MSME DIs is noteworthy. Sir, please.
Thank you very much, Soumya. First of all, let me take this opportunity to welcome. Yeah, please, remaining people can mute yourself. Let me take this opportunity to welcome the distinguished guests on this panel, and even all the MSMEs who have been very enthused to join this webinar titled International Trade Finance Opportunities for MSMEs. So first of all, let me welcome Mr. Kazipet Gopal, who is the Vice President, who have been instrumental in starting this particular training program, so that it can benefit the micro, small and medium enterprises, and they can actually enter into international trade. So first, we also have Mr. Ramnathan Iyer, an international trade expert, and was also worked in different logistic companies, and who had been instrumental in making up and creating a lot of export entrepreneurs or international entrepreneurs in this regard. I'll briefly introduce about our own institute, because most of the people doesn't know, and even people in and around Hyderabad doesn't know what is National Institute for MSME. National Institute for MSME was established in 1960 in New Delhi, and later on it was shifted to Hyderabad in 1962. And it has made valuable contributions by creating impressive records of achievements beyond the Indian shore, not only in India, but in different parts of the world. It has enabled other developing countries to get benefit of the institute's facilities and expertise. And this institute has associated with some of the prestigious international bodies like United Nations Industrial Development Organization, which was also, it has recognized ni-msme as an Institute of Excellence, and even other UN bodies like UNESCO, ILO, CFTC, UNICEF, ARDO, and of course GIZ, the German-based organization. And this institute intellectual activities, actually, they are pursued by four important schools of excellence. They are School of Enterprise Development, School of Enterprise Management, School of Entrepreneurship and Extension, and of course, School of Enterprise Information and Communication. And this school is also having some focused centers, very important focused centers like National Resource Center for Cluster Development, one of its kind in the entire country, for helping MSMEs by implementing the cluster development approach, and it has done a pivotal job in this regard. Presently, this institute is involved in the development of more than 50 rural artisan industry clusters across the nation, and it is also supporting the KVIC, the Khadi Village Industries Commission, CAIR Board, National Backward Classes Federal Finance Development Corporation, National Scheduled Caste Finance Development Corporation, and various state governments for development of handlooms, handicrafts, food processing, textiles clusters, and so on. We also have Intellectual Property Facilitation Center, which is providing IP advisory services to various research and academic institutions. We also have been promoting various clusters, SMEs, startups, and even individual innovators through our Intellectual Property Facilitation Center. And as on today, 150 micro and small enterprises got benefited from our IP registrations, and not only IP registrations, trademarks, designs, and so on. There is another cell called Goods and Service Tax Cell, which is providing GST registrations and tax compliances, which is one of the latest tax regime which has been introduced in our country. And this has been very, I think some of you are mute yourself. There is an echo. Yeah. So we also have entrepreneurship development cell, livelihood business incubator, which is supporting MSMEs for creating favorable ecosystem for entrepreneurial development in the country. And it is storing and supplying information. This institute is storing and supplying information to make successful entrepreneur who is well versed in the intricacies of business and can participate in business activities intelligently and diligently through its SENDOC, that is Small Enterprise Development, National Development and Documentation Center. And this institution is also publishing one of the very important journal called SETME, Small Enterprise Development and Management Extension Journal, since 1974, one of its kind in the world and the initial one in the world, attracting a lot of contributors, not only from this corner of the country, but also from developing and other advanced countries of the world. And as on today, this institute has trained more than 5,40,877 participants by organizing more than 16,106 training programs for officials from ministries of Government of India and state government. ni-msme has also been imparting skill training, and as on today, nearly 1,16,221 skill training programs have taken up, and the unemployed youth were get benefited from this ESDP programs. The institute is also implementing Indian Technical and Economic Cooperation, which is a scheme under Ministry of MSME, where we have been doing this from 1967 and trained more than 10,350 international delegates across 143 developing countries. And we have also completed nearly 1,000 research and consultancy projects in the last 50 years and odd. And this organization is coming under the Ministry of MSME, and it is governed by the Governing Council, headed by the Honorable Minister for MSME, Mr. Nitin Gadkari, and the governing body is acting through our present Director General, Mrs. Glory Swarupa. From last 3 to 4 years, we have been striving very hard to help the entrepreneurs, especially those MSMEs who wanted to project themselves and enter into international market. So we have actually tied up with Indian Institute of Foreign Trade, and some of the participants who are here on this board have been trained for entrepreneurship development program for startup and scale up of international trade. We have taken up this in IIFT Calcutta, Indian Institute of Foreign Trade, Calcutta, and this was sponsored by National SCST Hub. We have also collaborated with the Indian Institute of Management, Tiruchi, the top rated Indian Institute of Management in the country. Its ranking is 6th in the country. And we have also taken up entrepreneurship development program for startup and scale up for domestic trade to promote the micro, small and medium enterprises. So it is always a privilege to address the gathering, especially the MSMEs who are always in the forefront for helping this nation in its development. And as you know that our Honorable Prime Minister, Mr. Narendra Modi, wanted to make this economy a $5 trillion economy, and it is possible only through two things. One is through development of MSMEs, and another thing is having self-reliance of MSMEs, that is import substitution, where our MSMEs can avoid import of goods from other countries and produce them within the country and substitute those imports. And at the same point of time, we also cater to the requirements of the entire world through our exports. So this is something a brief about our organization, that is National Institute of MSME. Of course, at the end also, I'll try to tell you what exactly we can do and we can help you in the future. Thank you very much. Yes, Soumya.
Thank you, sir. Now we would like to invite Mr. Ramanathan N.S. Iyer. Mr. Iyer has over 26 years of corporate experience in shipping, freight forwarding, logistics, EXIM, P&L management, general management, sales and marketing in global MNCs. He has worked at senior management level with global shipping and logistics organizations like AP Moller Group and Quinn and Nigel. Currently, he is involved in commodity trading, consulting, and training. Sir, please.
Yeah, good afternoon, everyone. It's a privilege to talk about international business in this forum. So I would be briefly discussing about the payment terms. See, the time is a bit little, so we'll try to cover as much as possible, because the payment term is a very deep ocean. But then it's very important at least to get some heads up, so that at the end of the day, we are all getting into this business of import and exporting for the various, it's for to make some money and put to grow the economy. But it is very important to understand what exactly we are talking about here. So I'll straight away deep dive into the topic. See, when we talk about the payment terms, there are three kind of payment terms which we have common. Advance. It could be 100% advance, wherein, for example, you are an exporter, you are exporting a product, say from India to South Africa, you are exporting something. And it can be, if you have a very niche kind of a product, wherein you have a monopoly, wherein we all know that monopoly is absolute rare in today's world, so it doesn't really happen that way. But then, yes, there is something called 100% advance, but then that is something which is really rare. And we don't see that, but that doesn't mean 100% advance do not happen. For an exporter, it is the safest mode of payment, because you don't need to go in for any kind of a financing and so on and so forth. You don't have to really worry about the money not coming in time. You're getting the money right at the beginning. So that is the safest mode from the exporter's perspective. The second one is documents against letter of credit. See, basically we have two kind of letter of credits, that is LC in short form. The first one is called at site. Okay. Now at site, let me give an example. Let's say you are moving a cargo, some shipment, let's say from the Delhi airport, and you are sending it across to New York. Okay. And if a letter of credit is involved over there, now what really happens is at site means at the origin. Origin in this case is Delhi. I'll deep dive onto that and I will further explain what exactly we are talking about at site. The second one is, you have heard about at times terminologies like 30-day LC, 45-day LC, 60-day LCs and all. That is basically called nuisance. I will again get into it, elaborate further as we move forward. Then the third one is documents against collection. Now see, not everybody works on the LCs, but then a lot of people, what they say that, okay, I will export my product, but then I will give the documents to you, to the, I mean the importer, only once a payment. So it means once the ship or the aircraft is left, you will hand over the documents to them, that is to the importer, only when the money is into your bank. One is that. The second one is against acceptance, documents against acceptance. That is, he is saying that I will pay you the money, but he's not paying. I will elaborate again. So basically, three categories: advance, safest for the exports. Second is we are talking about letter of credit. Third is documents in the collection. So these are basically the most common terms. From the point of view of advance, as I said, it's you receive by telegraphic transfer. We call something, there's something called MT103. Demand draft, okay, but then most of the time it's all telegraphic transfers in predominantly in today's world. Now, at times what happens is, let's say you are getting 100% advance from an exporter, from an importer, but then the importer also wants to play safe to make sure that you will send the goods in time. At times, it could be possible the importer in turn may ask you for a bank guarantee. But then, as I said right at the beginning, unless and until you have a real monopoly, very niche kind of a product, it would not really serve you well to sell your product against advance terms. Yes, it is definitely possible that you can ask for, and you should ask an importer for some advance. I would say that you want to succeed in the business, you have to wear a salesman's hat. I wouldn't say start with 50%, but should not go down less than 20-25%. That advance you should definitely push in for. And rest, okay, you can. So always 100% advance if you're able to get, fantastic. But then let's face it, in the realistic world, it will not really happen. But from the academic perspective, it does exist. You can definitely get an example. Okay. Then we go to the advantages which we have. 100% secure for the exporter. Let's say you are an importer. You are importing something from Vietnam. You are paying the exporter in Vietnam 100% advance. It is not safe for you. You don't know when the goods will come, whether you will see the goods or not. And there's, see, there are checks and balances for that also. But for the import, it is not the safest. So whenever you are importing a product, I will strongly recommend, don't even think about it. Forget about this advance thing. 100% no way. If you're exporting, be my guest, yeah, for you it's the best thing. You don't need to go in for any kind of advance or anything. No loans, nothing at all. Get the money and do your business and set up. There's no bank commission because there's no letter of credit and all. Liquidity is not an issue at all because you're getting your money right in advance. So the vendors whom you are procuring the product from, you don't have any issues at all. So advance payments safest for the exporters, but it's not always going to happen. It's the rarest of the rarest thing. So unless and until you have a very niche product, do not really push in for that. You'll find it difficult to get the buyers. Okay, now I go down to the next one. Now, what is letter of credit? Now, letter of credit basically is a document opened by the party which wishes to import the product. So, meaning which it is always the importer who is going to open the LC. The communication is through the bank channel, and the payment, depending upon what kind of an LC, we'll move on to that as I discuss further. The payment will be done. So most important, it is always opened by the importer because he's the one who is wanting the credit. You are the exporter. You don't require a credit to export your product. Local market credit is not what I'm talking about, the international business. Okay, LCs, as in the first slide which I showed you, there are two categories. At site, payment is immediate. Then we are talking about usance or deferred, which is credit. When we talk about a 30-day credit, 45-day credit, 60-day credit, we basically call it usance. See, let's accept that fact, whether it is domestic business or international business. Unfortunately, credit is a sales tool which is used by people. So you will definitely have people at the end, many times the dotted line is signed only when a credit is given. So yes, at site, I'm not saying at site doesn't happen. There's a lot of at site business just take place, but you will also have at times you'll have to give a 30-day, 45-day kind of a credit line. And that basically is called usance LCs. Now, the risk in the case of the at site is lower compared to usance. The best part when we talk about this is, under this, the seller gets his payment immediately upon presenting. Let's take an example. You are moving a product, say from Mumbai to Hamburg by ocean freight. Once your ship has left the Mumbai port, and once you have got your shipping documents and everything, and if you submit your documents to the bank, and if the bank finds that everything is absolutely hunky-dory as per the contract, as per the LC terms, very critical. See, you can't make a mistake in the terms which is mentioned in the LC. If you don't abide by that, then you will have challenges. You not only end up paying certain monies to the bank, you also get your money delayed, which results in your liquidity crisis. So you submit your document, and irrespective, see, this is very, very important. Irrespective of the buyer bank, that is the buyer in Hamburg, his bank paying or not is a different matter. Buyer paying his bank or not, you will get your money. You will get your money. So that is an advantage of the letter of credit. Of course, it doesn't get free of cost. There are costs which are involved for opening of the letter of credit as well. So it's not something which will be coming free. So at site is something which is immediate payment. So you hand over, normally it takes a few working days and you get the monies. That is what is called at site. Then we go to the next one, which is usance. Let's say you're talking about a 60-day credit line. Now, in the case of the 60-day credit line, what happens is, suppose the ship reaches Hamburg port in 30 days. Okay, your importer will sign certain documents at the bank at his end in Hamburg, and he will be given the document by the bank. But you will be getting the money only after 60 days. So what happens is the buyer has already got the product. The buyer has already got the product, but you will be getting, because the credit is between you and the buyer. The bank is only a facilitator. The credit is not given by the bank. That is something very important everybody should understand. It is not the bank which is giving the credit. The credit is being given by the exporter to the importer. Here again, 60 days, he gets the money irrespective of the buyer paying his bank. That is the Hamburg, where he opened the letter of credit, whether he pays the money or not, the money will be coming down. You will be getting the money. But then whatever the time period which is mentioned, based on that. So basically, we are talking about excite and usance. See, there are actually many other categories under this. Unfortunately, paucity of time, we can't go into that because you require actually a good 1 day for to discuss about letter of credit. But then to give you a heads up, these are the two categories in nutshell which we have: excite and we have usance. Now we go down to the third payment category, which is called under collection. So see, in this case, what happens is, you have moved a country, your ship is left Mumbai port. What happens is, you will tell the buyer, probably send across a scanned copy of the shipping document as a proof to tell him this is moved. But you will give him the original or courier or hand over to his agent the original document only when the payment is done. Now see, here I have also mentioned the line, risk, the buyer may not release the document. Let's say by the time you loaded, the ship is left. Some kind of a dispute comes up, or let's say the buyer goes bust. He doesn't have the money. You are safe because the buyer cannot take the delivery of the product till the time he has the documents. But suppose he doesn't have the money in the daytime, you have a problem. Because till the time he doesn't pay the money, you won't send him the document. Fair enough. But you require the money, yeah? Because the ship is already left. In the next 20 days, it's going to reach the destination. What are you going to do now? So to that extent, this is risky. So that is the reason, letter of credit really help out, is that you're not really worried about that, whether he releases or he may not release. So there, to that extent, this becomes a bit risky compared to that. But yes, the advantage here is you don't have, there are no banking charges and so on and so forth, but the risk is definitely high. So normally, we work against these kind of payments once we have developed a rapport, we have developed a relationship, we know the buyer quite well, then we always do, we work on this. But right from the beginning, it may not be a very good idea to do that. Then we go to the next one, which is called documents against acceptance. One of the most risky kind of a thing. See, what happens is, you can use a bank for this. You are handing over the document to the bank. The bank in Hamburg, they will just present a bill of exchange, okay, which is the acceptance. He gives an acceptance to pay the money. Now, the most important thing here is, as per the due date. If you see the next line, it says it is very, very risky because bank has no responsibility to pay. If the buyers tomorrow refuses to pay the money, because there is no letter of credit, nothing which is really involved. because something there is in the LC which is called a confirmed LC. You can get a confirmation from the bank, and once a bank gives the confirmation, everything is absolutely safe. But in this case, it is going to be very, very risky for you, because suppose after the product reaches there, if the guy says, I don't pay you the money, you have a problem. The bank will just hand over the bill of exchange, which is the receipt which your buyer gave as an acceptance, and tell you, okay, now you can go to the buyer and take your money. So to that extent, you've got to be very careful with documents against collection, both the cases. The documents against acceptance, guys, be very, very careful, because this is highly, highly, highly risky. Yes, you can use those things. You have one brother sitting here, one brother sitting in some other country, no problem at all. Then there is no financial risk. But otherwise, you need to really play safe. So to that extent, don't really worry so much about LCs. It is tricky. I won't call it complicated, but if you understand the business, it is very, very safe. Okay. Now, dispatch of the documents. Under what circumstances are you going to dispatch the document directly to the buyer? Only if you have 100% advance. No problem at all. Paisa aa gaya mere paas. I'm not really worried about it. The second one is, it is mentioned in the LC. But come on, why are you going to mention in the LC? Yeah? You would never do that, because you want your money to be safe. So be very, very careful about what you mention in the letter of credit. Any deviation or any discrepancy, the bank is going to charge you X amount of money, and that is straight away out of the bottom line. Then the last one, status holder. You would have heard about companies which are 1-star, 2-star, 3-star, 4-star, 5-star export. So if you have any status holders company, no problem at all. You can send it across to them, because they are governed by certain laws and other things which are there. So other than these three cases, you're not going to send your documents ever directly to the buyer. This is going to be a very risky thing, because once he had the original documents with him, there are no recourses which we have. It's a big problem. So you've got to be very, very careful. And this needs to be really percolated down to the staff below also, because some smart Alex, if he just couriers it, you're going to be in deep trouble, because there are no recourse for that. Now, I'll briefly go into the process flow, how the letter of credit really. See, after how does the business start? This initially you find the buyer, you quote a price to him, you discuss the terms and conditions. Okay, so once you have agreed upon the same terms and conditions, everything is done. Then, as I said, the buyer is the one who is going to open the LC. Now, the buyer instructs his bank, like the same case let's take, it is Mumbai to Germany, in Germany, to open the LC as per the agreed terms of sale. What is that terms of sale? It is basically the contract. So LC will always be preceded with a contract, ideally. And your contract everything in the contract will come into the LC, so that life becomes very easy. And please, before you open the LC, always exchange the draft copy of the LCs n number of times by email. Make sure there are no mistakes which are done. Mistakes in the sense, let's say you are living in Hyderabad. You want to move a shipment from Mumbai, and let's say we are talking about today is 19th, and you want it to be the last shipping date as per the LCs, let's say it's mentioned 25th of February. You will never achieve that. It is impossible to achieve it. So timelines are again very important, because any discrepancy, it can result in problem. It is not just the bank which is going to charge you for discrepancy. Your buyers also many times ask you for discounts, because you had agreed upon. So please go through it word by word, exchange n number of times. But once LC is opened and everything is black and white, then it gets a bit difficult. Then the next one, now what happens is the buyer's bank prepares the LC, issues with all the details, and this is something very important, to the seller bank requesting confirmation. Seller's bank, that is, they will give a confirmation. They will give a confirmation. The seller's bank giving a confirmation that everything is fine. So there is something called a confirmed LC. Please always go for a confirmed LC. It makes your life easier. So once they have requested confirmation, then the next one is, so the seller, as I said, you will be requesting, because you require your money, right? So you are going to request a confirmation from their bank, And once the bank in Hamburg gives you the confirmation, you are still safer. So after that, what happens is you will be getting the LC from your bank in Delhi or Mumbai or whatever it is. Please check all the conditions. But as I said, this carefully reviewing should happen even before. See, let's accept it. You are working with a buyer who's your customer. So we have to help him and he would help us. So please run through that. You should never get into the reviewing at this stage. Because at this stage, if you start making changes and all, this is going to be a problem and delaying and so on. So once you have delayed, you need to sign and you have to hand it over. Now the real work starts. If you are a manufacturer, you need to manufacture product. If you are a merchant exporter, you have to procure the product. You procure it, give to the logistic player. Basically, see, the logistic player is the freight forwarder who has to move it across through the airport or the seaport. Once the goods is loaded to the seaport or the airport, there are various documents. The documents could be, in case of air freight, it is going to be something called a air bill. In the case of the ocean freight, it is going to be bills of lading. There is something called a shipping bill. And what all documents you have mentioned in your letter of credit. See, your buyers might be requiring a lot of documents as per, there could be certain rules in his law of the land. So maybe we require certain specific documents. Everything will be very, very clearly mentioned in the LC. All those documents you have to go and you have to present to your bank, informing that everything at this stage, the bank is going to read the documents word by word. This is something very, very important to them. They are going to check, and if everything is fine, depending upon whether it is a LC site, which is basically immediate, or LC at usance, 30 days, 40 days, 60, 45 days, whatever the time period you had agreed upon, you will be getting the money. The documents after that is sent across to the buyer's bank for reviewing and passing on to the buyer. Now, the bank releases the document to the buyer to claim the goods, because as I said in the beginning, the buyer always requires these documents. He will not get the delivery of the product without these documents. That is the airway bill and the bill of lading, because these are title documents. The title has to be changed. So till the time he doesn't get it, he can't get it. So the bank will hand over to them. And once that is handed over to them, then what happens is the buyer pays as per the LC terms. 30 days, 45 days, whatever it is. Transfer of fund from buyer's bank to the seller bank, and the process ends. So very important thing, please do remember that it is going to be the buyer who's always going to open the LC. The seller has got absolutely no role here. But please always exchange the copy n number of times and make sure all the terms and conditions, all the timelines, proper packing, and so on and so forth, everything is properly adhered to. You're making any mistake in that, anything which is discrepancy as per the document, the banks are going to charge you, and delays, the buyer is going to really charge you. So you got to be very, very careful as well as this particular instance. Okay. So with this I end, we can move further. Thank you, Dr. G.
Thank you, sir. Now, we would like to invite Mr. Kisepat Gopal, Senior Vice President, Trade Finance and Forex, SME, and Business Banking, Regional Head for AP Telangana, Yes Bank. Mr. Gopal has banking experience of 16 years in trade finance industry. He started his career with IDBI Bank Limited, Mumbai in the year 2005. He has been associated with Yes Bank Limited since 2012. Mr. Gopal has pursued his PGDM in finance from Indian Center for International Business, Pune. Sir, please.
Thank you very much. I hope so I am audible to everyone.
Gopal sir, please try minimizing the volume of your speaker so there is no feedback.
Okay, all right, one sec.
Yeah.
Okay, hi, good afternoon, everyone. My name is Gopal. I take care of trade and forest business for yes, MSME segment, taking various finance mechanism for the exporters on from the banking aspect, which will reduce their cost of borrowings as such is concerned. I'll be sharing one of my presentations so that it will be more fruitful for you. Just one second. Can you see my presentation? Are you able to see my presentation?
No. It's not visible, sir.
One second. Hold on. Yeah.
Soumya, can you help Gopal, sir?
Yes, sir. Gopal sir, you can just stop sharing once and restart your sharing. Sometimes that works.
I think it's taking a little of time. Anyway, I would, yeah. You see that?
It started, sir. You can just go ahead with your presentation now.
Yeah, it's visible, sir, now. Yeah. Now you can go ahead. Sir, please unmute yourself. Your voice is not audible. Unmute yourself.
I'm sorry about it. Yeah, I think.
Yeah. The presentation is visible.
Yeah,
yeah.
all right. So I would like to carry
You
now.
share it full screen share.
Yes.
Yeah.
Right.
Yeah. You can go ahead. Thank you.
Thank you very much. So basically, what we have been got from MSMEs, what these people, MSME customers who would like to do some exports, they always have a fear, as specifically from various trade terms. So the objective here is to simplify all the trade terms. In fact, Mr. Ramanathan Iyer has provided a various trade terms about the international trade. And for a banking parlance, generally this particular section of import is generally known as trade finance. So most of the private sector banks and public sector banks, anyone you would like to get some guidance on certain import and export have generally need to try to reach department known as trade finance. When people speak about trade finance, it is nothing but financing trade. What is trade? Nothing. And buy or sell a transaction or any export or import is a trade basically for an entity, and financing such trade is trade finance. What is my objective here? I'll be covering through various schemes for exporters and for importers, but then my priority will be and my agenda will be to cover the major export benefits for the exporters based in MSME market. So what we'll be looking at will be certain terminologies known as. There is something known as finance forward rates, LC-backed bill discounting, foreign currency term loans, transferable LC, pre-shipment, post-shipment finance. So this is in a nutshell what we are going to look at. Now, when we look at our trade finance, as far as the Yes Bank is concerned, or maybe let across any banks are concerned, which is a private sector or an public sector bank, generally the trade is generally broken into various parts, which includes imports, exports. There is something known as inland trade. There is something known as remittances. There is something known as advisory services and receivable and payables. So generally imports, when you are buying some materials from abroad, so we have various instruments. When I say we, it is basically the banking fraternity. So we have various instruments, something known as a letter of credit, something known as advanced direct remittance, bills on collection, which Ramanathan Iyer sir has spoken about it. Buyer's credit, supplier's credit, loan against imports. On exports, we have something known as pre-shipment finance, post-shipment finance, export collection, export LC advising. So my major focus will be at this juncture to speak about the export finance aspects, which includes pre-shipment and post-shipment. Trade finance department in bank generally also have an inland trade, which will include domestic LCs and bank guarantees. Bank guarantee given by contractors, non-contractors towards performance, bidding, all those aspects. Domestic LCs is for basically for procurement of local raw materials. You also have remittances, which will include capital account transactions, generally known as FDI, foreign direct investment, or an overseas direct investment, and ECB. So generally on MSME space, such kind of remittances may not be of a big volume, but generally in wholesale or a corporate banking structure, when foreign institutional investors into a company or for Indian entities setting up a subsidiary abroad, the things which generally happen on remittances. As far as Yes Bank, we have a team who generally provide advisory services on all the import and export aspects, regulatory advisory and investment advisory. So this is in what nutshell about and all trade finance services in Yes Bank and across global fraternity, banking fraternities. Now, I'd like to take you across the banking products available for an exporter. So now the concept is very clear. A bank is basically a facilitator for conducting the transaction. So as a banker, we assume a party in India who's a seller has done a due diligence about his buyer and he knows about the buyer and there's a primary contract he is entering into. So the contract is what will define how the seller is going to sell this particular product, whether is it on an advance payment or whether he is giving a credit, whether there is going to be an LC. So the primary details of this, how this transaction has to be completed, or how this transaction has to be conducted with respect to an export transaction is basically defined by the buyer and seller. We have seen many MSMEs coming and asking us how to frame a contract. See, banker is concerned, we will not be able to help you in defining a contract. The contract has to be defined at the comfort of the seller and the buyer. So once you enter into contract, we can also provide an advisory on this particular contract. What is the risk associated with it? The framework starts with. Now, tomorrow, let us say, in fact, you have got an export order and you would like to avail an export finance. Now, why export finance? Export finance is something, a concessional finance given. So when we speak about concessional finance, it is backed by RBI/government support, wherein we get certain kind of, or we have been advised, because it becomes a priority sector lending for the bank. So we have been advised to provide at a lower rate of interest than the CC rate of, or the regular OD rate of interest. And second, this also promotes the country's export, one, the country's visibility across the globe. Two, it is also foreign earning for the bank. Well, coming to the financing mechanism, generally what happens when there are two legs of an, one is a pre-shipment finance, the other one is also post-shipment finance. What is pre-shipment finance? Any finance given to an exporter for procuring the raw material, converting into semi-finished product, finished product, and packed into the whatever is the packing facility, and then kept till the ship or when it has been sailed. The time duration or the financing for this time duration for procurement product till it is getting sold. Finance. Post-shipment is generally for the credit period which the seller has extended to the overseas buyer. Now, seller, on various reasons, may have to provide a 60 days usance period, will have to give a 90 days credit period. So, on the post, the shipment is done and the documents are submitted, that particular credit period has generally been funded or financed by the bank. So, this is generally a pre-shipment. So, the terminology is quite shipment, very simple. Across any bank, you go and speak about, or a banker or someone speaks about your pre-shipment finance. It is nothing but finance required by an exporter till the shipment for the credit period. This facility of pre-shipment and post-shipment can be given in both INR and FCY. You may get an order from US denominated in USD, or you get an order in Euro, it will be an order from Europe which will be denominated in Euro. So what happens here, we provide you a loan, or any bank will provide you a loan in the same foreign currency itself, which will help in two aspects. One, you are mitigating in foreign exchange risk, because today, let us say you have received an export order for $1 lakh. So today, and let us say the overall execution, you take around 30 days lead time to manufacture and sell, and you are selling it on a 90 days credit period. So overall, your time delay for the entire payment to come is around 120 days. Now, there are two things which can happen. On 120th day, you would have done your costing basis today's market rate of, let us say, 73. So there are two things which can happen on the maturity date on 120th day. If the market is at 75, you are going to make extra amount on this particular deal. Unfortunately, if the market goes to 68, maybe you may not be entering into profit proposition as well. In such scenarios, what generally the exporters does is they generally avail a packing credit or a such export finance in foreign currency. In this scenario, what happens? The bank will create the loan in foreign currency itself. So the loan will be in one order of 1 lakh. Bank may finance up to 90% of the order. So $90,000 loan is created. The benefit, one, is the rate of interest. So it will be linked with a is LIBOR plus 350, for example, which means LIBOR plus 3.5. 6-month LIBOR currently approximately 0.3 to 0.4. Overall, the rate of interest is less than 4% on per annum basis, which otherwise a customer would have not availed this particular packing credit or an export finance in foreign currency, would have used the CC or an OD, would have been paying at around 10, 11, 12, 8, whatever is it. So here he is able to save his cost, one. Two, tomorrow he is at the 120th day, that is after doing the shipment, after the lead period of 30 days, he does the shipment, credit period is over, and the 90th day he is receiving the payment, which is an overall 120-day cycle. He is receiving. You have to do only one thing. Your loan is also in dollars. After this 1 lakh, $90,000 will be directly used to set off. So irrespective of being affected with that particular loan. So that is what an export packing credit or an export financing. Now, each stage, particular loan is being taken, let us say pre-shipment stage, otherwise known as a packing. This again, packing credit is very clear till the packing of goods. So packing credit, if it is availed, it can be availed in either in foreign currency or it can be availed in INR. Same way, a post-shipment, it can be availed in INR and it can be availed in foreign currency. So that is how the system generally works. Now, I would like to take, before now, though I have explained about the packing credit or an export finance in foreign currency, it is also equally interesting to have packing credit on export finance in INR as well. That is very important. Now, what are the government initiatives for exporters to avail or to on an MSME space to promote export? So there is something interest rate equalization scheme. What does it say? You let us, which is into as per the definition, that is micro, small or medium enterprises. And across any product he does. Now there are two things. It should be an MSME, manufacturer, exporter. 5% interest equalization scheme or interest subsidy in otherwise, in layman's language. Coming again, let us say, as a bank, you have got an export finance which has been sanctioned to you. You have also got a CC at 10%. Maybe you would have got an export finance at 9.5% or 9%. You are coming under MSME, manufacturer exporter, and you are getting export orders and you are doing exports. In this case, the bank, as far as Yes Bank, various ways in which the bank looks at this particular scheme. As far as Yes Bank is concerned, if you're falling under MSME and you're a manufacturer exporter, I will give the subsidy upfront, which means, let us, I'll be charging you 9 minus 5, which is 4% on INR lending from day one, the time you avail this particular finance once you receive this particular export order. So your overall rate of interest is 9 minus 5. This 5 is something which we as a bank goes to RBI and claim it from RBI. Now, in case you are not an MSME exporter, then there are 416 tariff line products for which this interest equalization scheme is available. Now, most important is currently the scheme is available till March 2021 for government till March 31st March 2021. We expect this particular facility will be further rolled for another 4 years, but we are yet to get complete update on this. So once we receive the update, then this facility will be again provided for MSME manufacturer of this 5% subsidy. Further, till the expiry of that particular scheme is concerned. So many MSMEs we have seen are not aware about these particular schemes available, which has been given by the banks, and they pay higher rate of interest and thereby incurring more cost and lowering on the entire transaction. I will I would like to a small illustration as well. Though we have spoken about 5% on interest equalization scheme for manufacturer exporter, for traders also such facility is provided, but then it is not 5%, it is 3%. Now, let us say, just giving you and what we say is it's not as per the realistic numbers, and hypothetical example, wherein a customer who has received an export order, one, he is not aware about cash credit or he is not aware about export finance, and one, he is not aware about export equalization scheme. So what is the benefit on an customer who has got an export order or is an exporter on selling this export finance, how much he can save as far as the interest cost is concerned? Now, it is very important. Every penny saved on the interest is adding to your bottom line, which is your profit and loss. Now, we spoke, I'm taking 3 scenarios. You have a PCFC, you have a CC or an OD otherwise, and export packing credit with interest equalization of 5%. Now, your rate of interest we spoke, PCFC is generally LIBOR plus 3.5% for the exporter. So it will come to approximately between 9 to 10.5, 11, whatever is it. So I'm taking hypothetically 10.5. EPC again, PCFC is a foreign currency funding. EPC or packing credit in INR is an INR funding. Most important, interest equalization benefit of 5%, which is a subsidy, kind of subsidy, what is being provided by government is available only if your export fails in INR. If you are availing it in foreign currency, you don't get it, that 5% interest equalization benefit. Now, for EPC also, let us say the bank has sanctioned you. You have got a tenor. So we spoke 90 days plus 30 days, 120 days. So the entire tenor of this particular financing is going to be 120 days. I'm taking approximate exchange rate to be 74, which means a loan of 10,000 would be an 74,000 rupee loan. Now, interest equalization benefit is not available for PCFC, and neither you will not get any interest equalization benefit on CC. It is only for exporters who are being given with an export credit limit or an export finance limit in INR. Customer can be given export credit both in INR and which is in foreign currency as well, and the customer has his right to choose whether he wants to avail in INR or it is in foreign currency depending upon various market scenario. So you have interest subvention scheme, you have a benefit of 5%, which has been mentioned here. There is something known as forward premium. So I'm sure majority of the people and as an exporter is concerned, when you are entering into an export or later, sometime earlier, that you are making assumption of your exchange rate today and fixing up an export order, and the remittance is going to come on 120th day. So you are not sure what you need to pay or you would receive on each dollar on the 120th day. There is something known as a hedging mechanism by way of a forward contract, wherein in the current scenario, the hedging mechanism for an exporter is always under a premium. This is current market scenario. So which means, let us say today the dollar rate is at 73. You can book a forward contract for a maturity of 120 days. In this case, what will happen? The bank will fix a rate for you for a delivery or for taking dollars from you on the 120th day. The price is getting fixed today. So today being 73, there's a premium which will be added. So we enter into a contract with the customer stating that, okay, on 120th day when you bring me this dollar, I will pay you 73.50, for example. So that is the reason it is known as premium. So you enter into this contract, forward contract, and the dollar exchange rate has been fixed. So you have done your calculation with 73 today, and the bank is entering into a forward contract with a guarantee that when you give me the dollar on the 120th day, I'll pay you 73.50. So the customer is getting a benefit of the forward premium. So let us take, in the current scenario, it is approximately 3.2 to 3.5%. So the 5% and 3.2% is going to be an additional earning for the customer. It is an additional revenue for the customer. By booking this particular forward contract, he is actually making a little more on that particular exchange rate. Key benefit on this particular hedging mechanism? Hello, you can hear me? One second.
Yes, sir. You are audible, sir.
Okay, all right. Right. So once the benefits of a forward contract, once you enter into this contract, now let us say on the 120th day when your overseas party the payment to you, market could be at 72, market could be at 78 as well. So I would always, we are very clear when we speak to business people, because let us not enter into this gambling business of foreign exchange on your business. You want to do it, you do it separately. We always advise our client, you enter into a forward delivery of 120 days, you know, rest assured you're entering into a profitable situation. If you're looking at and you're keeping it open and thinking that the market will go up, we don't know what would be the situation in 120 days. There are various cyclical changes happening across the global phenomena. And we have been seeing last 8 months, 1 year, the rupee has started depreciating. People at 76 thought it may go at 80, 85. So we cannot gamble on that particular rate. For a business person is concerned, as what we speak, we always tell as an exporter, please, once you receive the export order, freeze your rate by booking a forward contract. You get an additional premium. Rest assured, when you receive the money, you are entering into a profitable deal. You may expect it may go to 80, you will make extra profit. There could be a risk that it may go to 72 or 70 levels and you actually make a loss on that particular transaction. Rather than that, you ensure each of every transaction is getting into profit and the business is sustained with that particular profitability. So here, now there are two benefits for us, and customer with EPC is concerned, that is export packing credit in INR. He is getting 1.2 a forward premium, which is 5 plus 3, 8.2 he is actually earning against a 10.5, which means his overall costing for this particular export order is 1.5, 1.8% on per annum basis. If it had been PCFC, his costing will be approximately 4%. If it is CC customer who is first not booking forward, would be entering 10.5% itself. Now that he is also booked a forward contract, his costing is coming to 7.3%. You can see what is the costing amount going to be. The difference is basically adding to your P&L. So always tell the
Gopal sir. Gopal sir. Gopal sir, you are not audible, sir. Can you try muting and unmuting once, sir? Sir, you are still not audible. Sir, you can hello.
Is it better? Is it better?
Yes, yes, sir.
Okay, all right. Thank you. I hope so. Now it is better off. Hello. Anyone missed out some? I don't know. So word would have been mute, or in fact, it was not audible. Is this okay? Should I continue from here, or you want it to be taken on the previous line?
Sir, maybe you can go back
This,
one slide at the end.
yeah.
Yes, yes, sir.
Fine. So I'm sure interest subvention 5% has been made clear. We have spoken about the forward premium of 3.2%, which is on per annum basis. I hope so people would have also heard about the forward. So the basically forward contract is a contract was basically between a bank and an exporter. As we spoke sometime before about the 120 days timeline for him on 9 to say 30 days for the lead time for him to manufacture a 90 days credit period. The rate, or because the exporter cannot be very sure what is the price at which he is going to receive, or when the dollar has been received on the 128th day, what is the price for dollar which he is going to receive. So it could be on a higher side or it could be on a lower side. So what we basically inform the customers specifically on exports is that please do hedge by way of a forward contract all the foreign exchange receivables. So rest assured, tomorrow if the market, maybe it may go at 80 levels or we are not sure it goes to 70 levels, you don't come into a loss. Booking losses something which the bankers doesn't see, or any bank, let us say not only the bank, a promoter also wouldn't like to see a loss into his balance profit and loss account is concerned. So once he books a forward contract, rest assured whatever the dollar rate is going to be on the date of maturity, which is 120 days from the date of you are going to receive the particular payment, you are rest assured that you are going to get 73.50 per dollar for the remittances which you are going to receive, and that the transaction or that particular. Now, with this take now into account, we see the effective rate of interest for the entire proposition is going to be when EPC with interest utilization scheme of 5%, which is a subsidy which you are getting from the government, your costing is against 4% if you are availing on PCFC, and 7.3% if you are availing from the CC, subject to the fact that you are booking a forward. Majority of the MSME customers, they don't, which means they are paying 10.5% as such of the CC rate of interest, and which makes it not so attractive. So here there are two things. When in an export, your profit margin also increases because of the lower cost of borrowings. Plus, this also helps you in giving extra discount and capturing more market. Now, let us say you're getting around 5 to 6% on an interest benefit. You can very well give a 2% discount to your overseas buyer, which will enhance the market of that particular product or of that particular country, which will enhance your business as well. So this becomes a win-win situation for both the exporter and as well as for the countries concerned. Basically, you are becoming a foreign exchanger. I would urge, I'm not sure, but then what we have, again, I'm speaking is basically what we have seen in the Hyderabad market or across South Indian market is public sector banks generally don't have any specific a department or a person who has been equipped with this particular information to pass on to the customers. But then these are the facts that these facilities are available, and it is quite important for a customer who is into export to avail these facilities, which will help them in reducing their cost. I would now take it to the next slide, which is basically the pre-shipment finance, as we spoke some time before, otherwise known as the packing credit. These are loans granted or any other credit provided by a bank to an exporter for financing the purchase, then purchase of raw materials, processing them into semi-finished good, manufacturing or packing of goods prior to shipment, working capital expenses towards rendering of the services as well. Now, who was eligible for availing a pre-shipment at a lower cost of borrowings? Any customer who has got an export order, which could be for export of goods, software. There are list of services which is published by the DGFT for us to ensure that only those services will be provided with this particular export finance. So that's an there's a GATS agreement. So it is as per the GATS agreement. So any customers wanted to know about those list of services, we can very well share the list of services. It's a huge list. Now, tenor of packing credit or a pre-shipment finance. The time generally depends upon the maximum tenor for a pre-shipment finance, that is for you to procure the raw material and to end up with the manufactured product. The working capital cycle for industry to industry will be different. So it is maximum to the extent of the working capital cycle or 360 days, which is lower. So maybe one of your customer who's into engineering may have a longer gestation or a longer period for him to manufacture. A pharmaceutical guy may have around 30 days, 60 days time frame. So depending upon the industry, which we go through, and we also see your balance sheet, we understand what is your working capital cycle, and that will be the maximum tenor for which the pre-shipment can be provided. Pre-shipment can also be basically, as far as the bank is concerned, they are provided on order or running account based. So what happens, being the concessional source of financing for the exporter, it is also prudent for the banker that this finance is being given to the right customers. And how do we identify a right customer? For those customers, who has to avail this facility, he should be having an export order. I cannot give it someone who's coming for his local requirement and saying that, sir, I am having an export order, please give me some export finance. No. So the customer generally has to give me a copy of order, and against that particular order, specific order, I'll be funding generally up to 90% of the order value for him to procure the raw materials, manufacture and ship the goods. There is also another mechanism known as running account basis, wherein he need not submit the order copy immediately. But then how would I, or how do I choose a customer on running account basis? For which we generally see the account conduct, or when we have a customer under order back facility, I've seen his account conduct for almost 1-2 years. I am satisfied with the fact that I can give a running account facility. Or a customer who has got only 100% exports, which means I know that he will not use this particular facility for any local transaction. He is all his sales are based on exports. I can give it blindfolded on this particular concessional finance is concerned. So in this case, he need not give me the PO copy or an LC copy at the time of disbursal. However, he has to submit it with me within a reasonable period of time, which is generally say 30 days to 45 days. So that is how an order back or a running packing account runs out. Then you have also now once you avail this particular finance, now it's your duty to also repay the bank on the due date. So how do you make the repayment? So any exporter, he can also open a foreign currency account, which is otherwise known as an EFC account, otherwise known as an exchange earners foreign currency account, which is generally available in all the freely convertible currencies, which includes USD, Euro, JPY, GBP, CAD, AUD. In all these 6 currencies, you can open foreign currency account. And let us say you are receiving some remittances against certain export order, or you have taken of the total exports, you may be only taking 10 or 20% of the exports under financing mechanism, balance 80% you may not be availing financing. So those funds, any balances which is there in EFC, I can, let us say tomorrow, let us say there's a delay in shipment, or once you've taken the export order, or once you've taken a finance against the export order, due to XYZ reasons, you are not able to do the export, or there's a delay in export. So you want to close my export finance. It is not necessary that it should be closed against that particular export order itself. Let us say you have some funds which has been received for some other export order which has been credited to EFC account. You can give me an instruction, sir, you please debit my EFC account and close my packing credit in foreign currency or packing credit in INR as well. Or this could be out of INR balance to the extent of exports done, which means you have done some exports wherein you have not taken any financing and you have received the remittance and which you have been converted and credited to your CC account. So that portion which has been credited, I can use it, again reconvert, or you can use it for directly closing your PC INR. If it is outstanding, then again it has to be converted and liquidate the PCFC's portion is concerned. Substitution of contract is allowed wherever justified for exporters with good track record. Let us say today you have received an export order and you have taken financing against it. So somehow you find there's a delay, or that export order is not getting to materialize. During the same time, you also had another additional export order against which you have not taken financing. So you can replace this particular export order wherein the export is not happening with another export order. Only thing is that both the export orders should be almost in the same timelines. Then substitution of export is being permitted. Proceeds from unfinanced export bill, which we have already discussed, and where the post-shipment documents are submitted to another bank and you have received remittance in that particular bank, that proceeds can be transferred with a certification from that banker stating that that particular proceeds which has been transferred is a part of the export realization. Now, what is post-shipment financing, or what we spoke about is the after the shipment, the period of credit which you have been given. Once cancel. the period of credit which is being given. So that should be in line with the working capital cycle of the exporter. However, it should not be more than 270 days or 9 months. This is as per RBI guideline. During this COVID time, RBI had given a circular stating that as an act of, on account of COVID impact, exports done till 31st July 2020, that is from the date of issuance of circular till 31st July 2020, the 9 months has been extended to 15 months. Now, in fact, we have also, in fact, on today, it will not be eligible. It is only up to 9 months. So that particular time frame is already over. So as of today, all your exports should be realized within 9 months, which means you cannot give an credit period of more than 9 months. The payment under that particular export should come to us within 9 months. National transit period in case of site, which in fact Ramanathan sir had communicated some time before. So generally site means once this documents, export documents goes to the overseas bank, the overseas buyer is supposed to make the payment immediately. So how do we cover, or what is the time frame for immediate? So immediate is generally confirmed by the overall transit period and the processing time, which is not more than 25 days. So when you are availing an export finance or post-shipment finance for a site bill, the tenor for such discounting is being done is generally for 25 days. Fine. Post-shipment financing, Ramanathan sir has covered very well into on DPDA and export bill negotiation, but still I will just touch base on certain aspects as well. Now, post-shipment credit means any loan or advance granted or any other credit provided by the bank to an exporter of goods / services from India from the date of extending the credit after shipment of goods / rendering of services to the date of realization of export proceeds as per the period of realization. So you are giving to a party A on export of 30 days credit. I will give you 30 days financing mechanism. Someone you are giving 90 days, someone you are giving 120 days. So it will be given to that extent of that particular bill financing. So export bill, generally banks have this particular phrases which has been used, which is an export bill purchase or documents against payment. And site LC or a site collection or documents against payment, the general financing a bank does is by way of an export bill purchase. An export bill discounting is when you are selling a goods under an acceptance basis or a usance basis. An export bill negotiation is generally when there is an LC. And if there's an LC and if it is against site or usance, both ways it is called as export bill negotiation. Now, post-shipment bill liquidation, generally, how do you close this particular loan? So there are two things. Now you have taken a pre-shipment finance. Once you submit, so let us say you have taken this pre-shipment finance for 30 days. Within 30 days, you are manufacturing, you are packing the material, you have done the shipment. Once you do the shipment, it's duty of the exporter to provide with invoice, transport document. It could be a bill of lading if it is a seaway mode of transportation, an airway bill if it is an airway mode of transportation, and an LR if it is which is by way of a roadways, and an railway receipt if it is by way of a railway. So invoice, a transport document along with the bill, shipping bill reference details. You as an exporter, it is duty of the exporter to submit these documents within 21 days from the date of export to the banker. So what happens once the bank receives this document, the bank discounts this bill and credit, or it is used, that proceeds is used to close the pre-shipment finance which is availed against that particular invoice. So you have got an export order of ABC, and against which once you have done an export, you raise an invoice referring to the export order of ABC. Once we discount this particular invoice, we close the particular pre-shipment finance which has been taken against the order ABC. So that is how your pre-shipment gets closed and your post-shipment finance is being kept open. So let us say it's a 90 days bill. So which has been the financing is done for 90 days and we wait for the export proceeds to come on the 90th day. Once the export proceed comes, we close the loan. any excess amount received is being credited to the customer. We still have the same options which is being spoken on the pre-shipment finance, that you can use it from the post-shipment can be closed from proceeds out of EFC balance or proceeds out of the other unfinanced export bill, export collection bill, out of rupee resource of an exporter wherein there is an export which has already happened. Post-shipment, now what happens post-shipment in case of export non-realization? You have sent the money, you have taken the financing, overseas party is not making the payment. In such cases, the export bill has to be crystallized in case of non-realization of export proceeds. So crystallization means, now when I keep the loan in foreign currency, and if the remittance is not going to come and it has not come in within the due date, I give a generally as per FDI guidelines, that is Foreign Exchange Dealers Association of India, a bank crystallization can be kept on hold up to 30 days, which means I have given you $1 lakh loan and the dollar loan is being open for remittance to be received for closing the particular loan. But on the due date, the remittance has not come. I can keep that dollar loan in the form of foreign currency loan itself for a period of 30 days. Why crystallization is important? Because if I don't crystallize it, we don't know on 45th day, 60th day if the payment will come or not. And what if the payment doesn't come? The customer will have to use his rupees resources to close this particular foreign currency loan. Indirectly, what happens? The more we hold with this particular foreign currency loan, there is a huge fluctuation in foreign exchange. So maybe the customer will end up in paying higher price because he has to purchase dollar from market at the TT selling rate and it has to be given to the bank for closure. So generally, to avoid such kind of foreign exchange risk, on the 30th day, the bank converts the foreign currency loan into INR. Now, once I convert into INR, rest assured, you know what is your principal outstanding. If otherwise, I don't know what is my principal outstanding, when you have to realize you have to make the repayment from the local source of funds, it will depend upon the exchange rate on that particular day. So generally, foreign currency loan, which is overdue for more than 30 days, is converted into INR by way of a TT selling rate, is known as crystallization. I would also, so my primary objective was to give you a prime understanding about various export financing mechanism is concerned. We have also spoken about the forward. You would be knowing the market rates, the foreign exchange rates, they are fluctuating. Various reasons on this particular thing, whether we cannot, no one can time the market. Generally, when people say we cannot never, or we are never, or no one in this particular banking or any kind of an economic industry will not be able to tell what is the dollar movement going to be. We may have a fair idea how is it going to be, but then no one can pinpoint and tell what is the dollar going to be on 30th June. So it is very difficult, and basis there are various economic reasons, there are various global policy. It could be various reasons on the as the country is concerned, which could be our physical deficit, other in fact political and non-political reasons as well, economic disturbances. Many factors will have an impact on the foreign exchange rates are concerned. So though this fluctuation happens, again what we as an exporter is concerned, we always advise them against an export order. It is very important that he always he hedges that particular receivable and books a forward contract. So rest assured, he is definitely going to receive that particular amount. Let us say he's booking and forward and the rates has been fixed at 75 and your receivable is on due on 31st December. Rest assured, when you receive this receivable on December, you will get 75. Irrespective, the market may be at 70 or 80. So that is on my part. Though we have a little more on to the various other mechanisms of export bill discounting on bank lines. This is basically with respect to when you receive an export order backed by LC. So generally we receive questions from MSME customers. Sir, we have an LC. Can you give me pre-shipment finance? It is very difficult for any bank generally to provide a financing. So what happens? The customer's objective is basically he is not, either he doesn't have a collateral to provide, or he is not willing to provide an collateral for the security of lending as far as the bank is concerned. But he has got an LC which he is ready to provide. See, LC becomes an obligatory instrument by an issuing bank only once you submit the document and I receive a document or a communication known as acceptance. What is acceptance? Is basically the overseas bank's assurance that we will make the payment on the due date. So it is not the overseas party's assurance, it is the overseas bank's assurance. So I have a faith on that particular bank. We have certain assessment done on that particular bank. We have done certain credit rating on that particular bank, and we have decided to take a certain call of exposure on that particular overseas bank. So let us say I am receiving an LC from Citibank US. I have already done a background. I am ready to take, say, 100 crores of exposure, and you get an LC. I will be able to do a pre-shipment finance only if it is provided by a collateral. But a post-shipment finance, once I receive the document under the LC, which I send it across to the overseas bank, and the overseas bank gives me an acceptance to be and security for me, and then provide you the discounting. This is generally known as bank line discounting. And bank line discounting on unsecured manner is available only in case of post-shipment finance, wherein the bank receives the acceptance. So acceptance is nothing but the assurance from that overseas banker who has issued the LC that he will pay the money on the due date. I would also maybe we have more sessions. In fact, we have more products on this particular import-export financing is concerned. Due to the paucity of the time, I would like to cut short it at this juncture. We can also maybe going forward have a session on import financing mechanism and a general update on the import-export mechanism of doing business. So maybe that is all from my side. Anyone would like to have any question, would like to raise up any question, you're most welcome. I can try to clear it out the best of my possibility. Thank you very much.
Yes, Soumya.
Yes, sir. Yes, sir. Thank you, sir. So, ready, sir? Shall we proceed to the question and answer round now?
Yes. We'll take up question and answers.
At this point, do any of the participants have any question for our speakers?
Either you can type your questions in the chat box so that we can read it out, or you can unmute yourself and you can ask questions. It's a very interesting session which has actually gone up. Please come out with your questions.
Do any of the participants have any question for our speakers? Ready, sir? I think the session was so informative. They don't have any any other questions.
Yeah. So I take up this opportunity to thank Gopal Garu for a very valuable information that has been given, especially for all those MSMEs, and not just MSMEs, those exporters or importers who wanted to finance themselves and help themselves to promote their products overseas in different parts of the world, as well as importing the capital goods into this particular country. So it is very important that it is has to be followed in a very systematic manner. So the presentation was so structured that right from the basics and step by step, it was very clearly informed, and it was presented. And both pre-shipment as well as post-shipment finance was very clearly explained, and different export finance products were also very clearly explained by Gopal Garu. So thank you very much, Gopal sir, for your valuable information. You have actually given a very elaborative and a very clear picture to our participants. The participants can also mail me any questions so that I can send these questions to Gopal Garu through mail. And you can also contact him through me for any kind of export financing opportunities or any requirement you have, so that we can work out, and we can definitely help the MSMEs in promoting their products to different parts of the world. So thank you very much, sir. And I also take up this opportunity to say thank you very much to Mr. Ramanathan, because before we actually understand the export finance concept, both pre and post shipment, we need to understand the concept of payment terms, international payment terms. That is very important, because only after understanding that we can actually go to this concept of export finance. We do National Institute for MSME in collaboration with S-Bank and other people will definitely come forward with more and more webinars to make it very clear and help all the exporters, especially from the MSME segment, to make it very big. So this is our mandate. And thank you very much, S-Bank, for your support, especially from back end, some of the people like Mr. Raja, who is a cluster head, who has been coordinating with me. So he was mediating between the Vice President and myself, and even Mr. Tirupati Garu, the Kukatpalli branch head of S-Bank, has also helped us. And Shamala Madam was also very cooperative in this regard in getting the speaker. And Mr. Rajan, who is located in Chennai, was also instrumental in taking up this particular program. So my thanks to all these people who have been very instrumental in supporting this webinar and helped us in coming out and reaching out to the MSMEs who are the backbone of this particular economy. So I request Gopal Garu to continue the cooperation in this regard in the future also, whenever we require your services and delivering the lectures for the MSMEs and exporters and importers in general. We would like to take your services, sir. Thank you very much for your support. And finally, thank you, Soumya, for moderating this session. Thank you very much. Thank you, one and all. So you can, if you have any further queries, you can. I'm just sending my mail ID, so you can mail to me, so that I'll forward these. It is not just questions, it is also with regard to your financial requirements. You can approach S-Bank.
Sir, Gopal sir has also shared his information.
Okay.
For anyone who wants to contact him directly also. So
Yeah.
the participants can just note down the information, and then shall I close the meeting in 2 minutes, sir?
Yes, yes, please. Yes, please.
I would also like to thank all our speakers from for the informative session. Thank you, sir.
Thank you.
Thank you.
Thank you, one and all. Thank you, Gopal Garu.
Thank you. Thank you very much, sir.
Thank you. Thank you.